Let's just kick off with a look back at first 2 days of trade for the week. We've seen the market shave off 0.2% on Monday. It shaved off over 1% yesterday, whilst other markets in the emerging markets and frontier market space continue to post positive gains. What, in your view, is continually weighing down on the recovery in Nigeria's market?
Basically, the current, because we are in the situation where full-year results have been expected and corporate actions also have been expected, with dividend yields in excess of 5%, estimated. And I also believe that the current tempo in the fixed income market will be sustained, given that the treasury bill rates is in excess of 16%, while the yield on bonds is also in excess of 14%. And aside that, I do not believe that the current upbeat in the equities market will be sustained beyond April, at which time the system would have assimilated the corporate actions. But I want to say that the fixed income market will continue to be very attractive, given that the benchmark rate, that's the monetary policy rate, is at 12%.
With short-term,
the events in the world, that is the
Dare, with short-term, little incentive to get into the equity market with fixed income yields, as you say, short-term T-bill yields at around 16%, and we know how the equity market has overall not really gone anywhere so far this year. It has been trading in ranges. What incentive is there for longer-term investors to start dipping into the stock market? When are we going to start seeing those longer-term fundamental investors starting to come in and buy up these cheap stocks?
The market as it is has very great upside potential for discerning investors. The challenge is that the locals do not have the wherewithal to fill the gap. Let me take you back. Way back in March 2008 or late 2007, when the equities market was at its behest, the foreign portfolio investors were on ground. But going by the crisis in their own markets, they had to call in their lines, So these monies were repatriated back to their economies. Unfortunately, the locals do not have the resources to close that gap, because currently, as we speak, there is investor apathy, there is illiquidity in the system, and given the bashing that investors received during the last recession, which we have not even gotten over, there's so much apathy. But for discerning investors who still have the resources, this is the time to take positions in the market.
Definitely, from a long-term perspective, interesting stock that is on your buy list right now is CAP. It's in the chemical and allied manufacturing space. It's a leading producer of paints in Nigeria, so pretty much getting exposure to the infrastructure space, getting exposure to the build space right now. Just run us through the investment case for seeing CAP, which is of course a smaller listed stock, but seeing it as a growth stock.
CAP PLC is a paints manufacturer. It's a subsidiary of UACN, Nigeria PLC. The number of shares in issue as we speak is 560 million. And it currently trades at 15 naira 12 kobo. Its 52 weeks high is 48 naira 58 kobo. And the estimated EPS, that is earnings per share, is in the neighborhood of 1.45 kobo. So we expect that a dividend of 1 naira will be paid because it has capacity to thrill the investing public.
Let's talk about UACN, because you say that CAP is part of the UACN body right now. It's also on your buy list, and touching many spaces of the economy. It has exposure to the food and beverages space. It has exposure to the construction space. Specifically, that JV with Tiger Brands is seen as an opportunity for growth going further down the line. Would you be buying UACN at the level it's trading at right now?
Yes, I would be recommending USCN. USCN has 1.6 billion shares outstanding. It currently trades at 23 naira or thereabouts. It also has potential to thrill the investors. The estimated EPS is in the region of 155 kobo or thereabouts. About maybe 195 kobo or thereabouts. We expect that it would maybe declare a dividend of between 1 naira and 1.50 kobo.
Dividends,
so it's also a good buy.
Dividend payouts and high dividend yields appear to be driving your investment decision right now. We've got the likes of Akomu Oil also sitting with a projected dividend yield of 6.85%, and also on your buy list. Interesting stock, also smaller cap stock, but one that you see trading at a strong discount to net asset value.
Yes, Akomu Oil has 476 million units in issue, which is quite conservative. It currently trades at 21 naira 12 kobo, and its 52 weeks high is in the region of 23 naira 58 kobo. It has an estimated EPS of something in the region of 10 naira. We expect that it has capacity to pay a dividend of 1.50 kobo.